The advantage candlestick investors have is analyzing reversals in the market, whether they're reversals or not reversals. Today, as we can see, the Dow had a big day, up 670 points on the day. But is this a candlestick signal? No, this is merely an up day and a downtrend. What are the implications? Well, over here we had a candlestick signal, a big doji harami type signal, positive trading the next day. That was a good implication there was going to be an uptrend. The lack of a signal, even though it's a big up day, has a less degree of probability, because if this was some sort of relevant reversal, the Japanese rice traders after 400 years would have identified what that was. And since we don't have anything that tells us what this signal is, it has to be implied that the Japanese rice traders had seen it thousands, if not millions of times, but it really didn't have any relevant reversal implications. What the implications are is there might be a bounce, but now you watch to see what happens at the first resistance levels. The NASDAQ created the same scenario, a good bullish day, but not a reversal signal. It's not a hammer signal. Remember, a hammer signal has a tail that's 2 times greater than the body. In this case, you can see this was a fairly big body and the tail not 2 times greater. Now this down here is more relevant because it's more of a doji hammer harami type day in the oversold area. So this, again, like the Dow, implies that it may bounce, but you should be more diligent to see what happens once it gets to the levels where the first resistance areas are. There were numerous stocks that traded positive today. Unfortunately, they didn't create reversal signals. They were just up days in a downtrend. However, on a day like today in VSM, where it gapped up and went positive above the open of the previous day, that is a kicker signal. That does have relevancy. You can be buying this one no matter what the market does tomorrow if it starts trading positive. Lowe's is another example of a kicker type signal where it opened here and closed here on Friday. Today they gapped it up and went positive, indicating a very strong change of investor sentiment, giving you a good probability that it's probably heading up, at least back up to the 50-day moving average. So identifying which signals actually occurred allows a candlestick investor, knowing that the market may not be selling off hard, they can still take advantage of the candlestick signals that occurred in each individual stock with much more confidence. There were good pattern setups. For example, BXC did a Morningstar signal right on the T-line, making this a perfect setup for a J-hook pattern. J-hook pattern is a wave 1, a wave 2, the J-hook, and wave 3 is usually the same magnitude as wave 1. That allows a candlestick investor to take different approaches, such as if we know that this was a 20-point move and this might be a 20-point move, that makes it a relevant trade, and it makes it relevant for putting different option strategies in place. The fact that investor sentiment works the same way time after time, decade after decade, century after century, it's the candlestick signals that have relevance, because that is what the Japanese rice traders have analyzed over the last 3 or 4 centuries and know that there's a high probability of what the results are going to be out of those signals or patterns. That'll be it. We'll see you in the chat rooms.